Good morning, good morning, good morning. It is, what day is it? Wednesday, the 7th of May, all day. This is the Morning Blast with myself and Mr. Michael Brown, where we jumpstart your trading day with a review, preview, and a bit of a laugh. But before we do, let's get the legals out of the way. So nothing to discuss on this space. This session constitutes trading or investment advice or infers any kind of endorsement by PIQ, myself, Ryan Paisley, or indeed Mr. Michael Brown. Speaking of which, how is you?
Good morning, Ryan. Good morning, everyone. I've got the hump this morning.
You have got a bit of a hunchback the way you walk, but yeah, what else? What?
Oh, I haven't had my full quota of sleep, and some muppet hasn't put spelt my name right in the title of this space this morning.
Oh, oh yeah. What have I done here? I've done Cam. That's very
Deary
odd.
me.
Oh, sorry. I've also not had much sleep, so I put it down to that. Apologies, my dear friend.
It's all right. You'll be forgiven eventually.
One sec. I'll change it right now. Due to the, oh no, I can't even type. Maybe I
Oh no.
won't. Oh no. Oh no. Quick, quick. Move on.
Oh,
Move
we're
on.
going to disappear now, aren't we? We're going to be
Oh,
taken off
it's
here.
just joined Ryan now. Fuck.
Oh dear. Right. Well, I'll go and get myself a cup of coffee then. In that case.
No, 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 no. Right, God, what's been occurring?
Oh dear. Right. Good morning, everybody. It was another relatively soft day, actually, in terms of sentiment yesterday. The S&P 500 closing lower by around 0.8%. Tech leading the declines with the Nasdaq down by almost 1%. We did, though, pair those losses intraday before sellers took hold into the close, but we do see futures trading in the green this morning, at least in the United States, after some trade headlines overnight, which I'll get to momentarily. Nevertheless, in terms of markets more broadly, yesterday we did see gains across the Treasury curve, with the front end leading the way as the two-year yield fell by about 4 basis points, sliding beneath 3.8%, and the dollar trading broadly softer against most peers. The dollar index down by about 0.5% on the day, cable reclaiming the 134 mark, and the euro rising back above 113.5. In terms of commodities, gold shining once again, the yellow metal adding another
Gold.
the yellow metal adding another 2.5% yesterday, and actually equaling its record closing high around $3,420 an ounce. Of course, the intraday record highs are all the way up at $3,500 an ounce, and crude rebounding as well, up by about 3.5% yesterday. WTI trading north of $59 a barrel. That has the feelings of a little bit of a dead cat bounce about it, given how the supply and demand dynamics are shaping up. I wouldn't be
I
surprised if
would
there's a little bit of
suggest
short covering going on there.
potential for a bit of risk premium being added due to given what we're seeing, and also on the Iran front as well. Yeah, so we do like a bit of risk premium in crude. So yeah, but I agree. The fundamentals are very unsound, but I wouldn't forgive anyone for there's a lot of shorts in the market. I wouldn't you wouldn't begrudge people short covering with what's going on, and also the move it's had.
No, that is a very good point. And of course, for those who are unaware, Ryan did used to trade a bit of oil. Not that he likes to talk
I
about it
don't
particularly
like
much.
talking about it. Well, I don't anymore.
Well, yeah, true. In terms of headlines from yesterday, then, plenty to discuss on the trade front. We did hear from President Trump. He was meeting ex-BOE governor and now Prime Minister of Canada, Mark Carney, in the Oval Office. Trump was saying that there will be, and I quote here, a very big announcement, as big as it gets, a really positive announcement that will come on either Thursday or on Friday or next Monday. But Trump wouldn't tell us what that announcement is going to be, or
USA are
what
going
subject
metric.
or what subject that announcement was going to be on. But he did say, and I quote again, that it will not necessarily be on trade. So that is
Wow.
well,
I'm sorry.
something to keep on an eye on. God only knows what the announcement's going to be.
So I wasn't saying wow to you. I was saying wow to our dear friend Zach. He just sent me something rather incriminating.
Oh dear.
Yeah, yeah. His card
We'll
has
we'll
been marked, shall we say? We'll move on. Move
we'll
swiftly
move
on.
on from that. Deary
He's
me,
in
poor
that book
Zach.
now.
We also heard Trump talking about China. He was saying in this Oval Office appearance that the US is, quote, losing nothing by not trading with China, which we all know is complete and utter nonsense. And as if to prove that that is complete and utter nonsense, we are going to have some trade talks this weekend between US Treasury Secretary Scott Bessent, the trade representative Jameson Greer. They are going to be meeting the Chinese Vice Premier, who is a chap called He Lai Feng. They are going to be meeting in Switzerland on both both Saturday and Sunday. Of course, just before anyone gets too excitable about this, I certainly don't expect to be sat here on Monday morning going, all is fine and dandy again, they've agreed a trade deal. This is, the first step towards potentially, possibly, maybe discussing lowering some of the tariffs that have been put in place
I
and the
mean,
effective trade embargo. Just one last thing on this, Ryan.
yeah, go on.
We have heard from the Chinese side this morning, who were giving a press briefing probably about 15 minutes ago, and they said that, well, they firstly confirmed that these talks are going to take place, but also noted that the talks are coming at the request of the United States, which I think is something to bear
Yeah.
in mind.
Just one thing to add on this, they have said that China's position, quote, well, this is from the Foreign Ministry, and I quote, China's position has not changed. And also, we've seen, pardon me, we have seen overnight a deluge of stimulus into the Chinese markets via the Politburo and with the triple R cut, etc. One thing, bear in mind, this is Trump's administration. Given that China apparently hasn't changed their position, given that China seems to be, stimulating the economy, pumping some money into it, you do that when you're expecting prolonged kind of hardship. I think the bar for the Trump administration to kind of make things worse in this meeting isn't that high, just because we know what they're like. So yeah, it could be one where we walk away on Monday going, actually things are a lot worse. But yeah, one to keep an eye on.
Yeah, no, I would agree with that. I think there's plenty of gapping risk around the futures
Ooh,
reopen on Sunday night. Yeah, it's very, very easy to see that going very wrong very quickly, to be
yeah.
completely honest with you. But yeah, we will nonetheless keep a very close eye on how that develops. In terms of other trade headlines from yesterday, oh dear, what's happened? What's happened here? I seem to have lost my notes. Hang on, bear with me.
Oh no, oh, it's all
Oh no, we're
falling
back. We're back.
apart.
We're back. We're back.
Oh,
We're back.
boo, boo.
In terms of
God,
other
everyone,
trade headlines
we could all
from
sense the
yesterday,
panic. We could all sense the panic on
there was a
Michael
lot
Brown's
of panic
lips.
there. Other trade headlines from yesterday: Bloomberg sources reporting that the EU have drawn up a list of 100 billion euros worth of US goods that they are prepared to target with tariffs if their talks with the United States fail. These potential retaliatory measures will be shared with member states in Europe as early as today, but in true European fashion, there will be a month-long consultation period before they come to a final version of this list. The European Commission is also set to share a white paper with the United States this week in order to try and kickstart negotiations. Thus far, talks have made very little progress indeed, and the expectation on the EU side is that the bulk of US tariffs will remain in place when the current 90-day pause expires on the 8th of July. Excuse me. Sticking with US trade deals, according to the FT, the United Kingdom and the United States are close to agreeing a trade agreement. This deal would lower tariff quotas for UK steel and car exports and could be signed as soon as this week, with the UK reportedly having offered concessions on the digital services tax, cuts on tariffs on US auto imports, and also lower tariffs on US agricultural products as well. But importantly, not having sacrificed various bits and bobs such as chlorinated chicken, which gets the media here in the UK very excited. I've got to be completely honest with you, it is going to be incredibly painful and hurtful for me if the UK is the first to get a trade deal with the States, because that means I might actually have to give Rachel Reeves a little bit of credit, which is something that I never really want to do. Sticking with trade and the United Kingdom, we did have news yesterday that the UK has successfully agreed a free trade agreement with India coming after 3 years of negotiations. India is going to cut tariffs on about 90% of UK exports. The government here in the UK saying that this deal will boost UK GDP by about £5 billion a year by 2040, so don't hold your breath on that one. It will also boost bilateral trade by about 25 billion quid a year by 2040. There has been quite a lot of consternation, though, around this trade deal, particularly in the realm of national insurance or social security payments, as some people may sort of more broadly know them. I'm absolutely not going to get into the politics of that here, but nonetheless, the deal is, well, being much better received in India than it is here.
Well, do you know
Let's
what?
leave it
No,
at that.
right, I'm going to speak up because I'm an employer, right? So here's right. Get comfy, everyone. Um, right. what the annoying thing about this
Oh dear,
is
sorry. Zach's incriminating himself again now, I think.
oh, on your chat. Well, he was
Yeah.
typing to me, so maybe he's realised he's typed to the wrong person. But yeah, so what the basis of this is obviously Labour have jacked up the employers' contribution to national insurance for hiring people, i.e., if you're in the UK, you should be a British citizen or on a visa or whatever. So what's happening now is part of this trade deal with India is that Indian citizens won't you won't have to pay national insurance. So for particularly in the entertainment and kind of industry and hospitality industry, lower skilled and where a lot of the migrants do move into. If you're say you're running a restaurant or a bar or something, and you've got two choices, you employ of a completely the same standard. You employ two people, but one you've got to pay X% on top of what you're paying them as a salary for national insurance. The other one you don't. Who are you going to employ? You're not going to
Well,
employ. You're not going to employ the British citizens. That's not being racist. That's not being anything. It's just very, very self defeating, and just it's self harming our own kind of economy because a lot of that money as well then gets sent back to the country of origin. Um, I just think it's a really, really, really idiotic decision. And it feels like they've not thought it through and they've rushed it through because they just want to be seen to be making deals. That's the impression I get. But as an employer, I'm sitting here thinking, well, do you know what? If I got the choice of two equal parties, I'm going to take the one where I'm paying less. It's just common sense, right? We shouldn't be doing that. We shouldn't be rewarding that.
well, there is a little bit more nuance to the situation than
Nah, fuck
than.
it.
Well, no, there is. I think it's important because they won't pay national insurance. This is where I think the issue comes in. You're correct in saying that if an Indian is hired in the United Kingdom under this trade agreement, they won't pay national insurance in the UK. What will be paid, and the employer won't pay national insurance either. What will be made is Indian social security payments. Now, I think this is where the issue comes in
Right.
because I think I'm fairly justified in saying that there are probably going to be under this agreement, whenever it comes into force, quite a lot of people in India who would be after a job here in the UK, better conditions, better pay, they can send money back home, etc., etc.,
Less chance of
etc.
being blown up by the Pakistani army.
That as well. I also think I'm pretty safe in saying that there aren't that many people in Surrey who are sitting there going, "Oh, great, I'm going to go and get a job in Delhi
Well,
tomorrow."
that's what
So
they
the
implied
the issue
yesterday,
is
wasn't
that
it?
the flow of employment and people is going to be very, very lopsided. I think that's probably what the bigger issue is, as
Well, yeah,
opposed to one's being paid and one isn't.
well, no, but this is it. But that's the reason, though. There's going to be more opportunities for people coming this way because employers are going to be more willing to pay Indian citizens over British citizens because it's going to cost them less. And look, this isn't. Please don't think this is me and Michael getting all like right wing morning blast. This is just how it. This is the facts, and sometimes the facts don't sit well.
Yeah.
So yeah, personally, I think it's a fucking ridiculous decision, and I say that as an employer. So if anyone wants a job at PIQ, like, give me a shout, especially if you're Indian. Like, look, we already have a load of Nepalese, and I don't know what we pay them. A lot.
Probably
We pay
best
them
not
a
to
lot. They're the
ask.
best people ever. But anyway, quickly moving on.
Oh, dearie me. Right, I can't really remember where I was now. US, UK India trade deal, yep, done that. A few other bits and bobs from me. Obviously, you mentioned a moment ago, Ryan, the policy easing that we've had out of China overnight. The PBOC cutting the 7-day reverse repo rate by 10 basis points to 1.4%. They've also cut the RRR, the reserve requirement ratio, by half a percentage point. So a little bit of stimulus coming out of China there. As you said, very much a case of bracing for a prolonged trade conflict as opposed to being prepared to fold like a cheap suit, which seems to be what the US are doing at the moment. In terms of other bits and bobs from yesterday, we did have a 10-year sale in the United States. That stopped through the when issued by 1.2 basis points. Pretty solid demand there. That, of course, comes ahead of the Fed later, which we'll preview in a second, and also ahead of a 30-year sale on Thursday, I believe it is. And last couple of things from me this morning. The first, DoorDash, second day in a row that I've spoken about them. Obviously, they confirmed their purchase of Deliveroo yesterday for 180 pence per share. They've also said now that they are going to be buying a company called Seven Rooms for about 1.2 billion in an all-cash deal. For those who are unaware, Seven Rooms are an online reservation company for restaurants and bars and things like that. And last but by no means least, a little bit of housekeeping. Ahead of the Bank of England tomorrow, the Bank of England will be publishing their policy decision at 12:02 p.m. tomorrow. That is 2 minutes later than usual, and that is due to the VE Day commemorations and 2 minutes silence that will be taking place at midday. So the bank delaying their decision slightly as a result of that. Obviously,
I
not
rate
going
that.
to impact what they say in terms of policy, but nonetheless, just one to bear in
I think
mind.
that's a very good touch. A nice
Yes,
touch
so
there.
do
I
I.
appreciate. Turns out,
And actually, I saw the big man on my way into the office this morning.
I was going to ask you, you see him at least once a month, or it feels like you see him once a month, and still can't get over he's got no security around him because
I know
some
he was
super
just
fan
walking
like yourself could just run up to him and push him in the river.
past New Look as if he was a
You look.
normal man in the
Um,
street when he's the most powerful economic policymaker in the land.
Yeah, exactly that. Well, apart from ourselves, obviously.
Literally.
Just a little, just quickly going back onto this national insurance thing because Tom, our dear friend, has just messaged me. Apparently, there is a bit more nuance to it. Apparently, there's some nuance regarding that it applies to Indians working for Indian companies on secondment. But yeah, I've not seen that, so I
Oh yeah,
apologize.
well, I mean, there's going to be a loophole in that somewhere,
Oh,
isn't
of
there?
course there
Let's
is.
be
But anyway,
honest.
look, moving on, moving on. So I've probably offended too many people already. Standard. But yes, so thank you very much, Mr. Michael Brown. So before we go back to you, let's read out some headlines from the overnight news roundup. As a reminder, it's on our Substack. You can also find it on our pinned tweet, etc., etc. Hats off to Zach for putting this together every morning. Can't stop, won't stop. Starting off in trade, obviously Michael's brushed on a few bits of this so far. Treasury Secretary Bezant and USTR Greer to meet China's economic representatives, in Switzerland, aiming to de-escalate trade issues. Bezant emphasized Switzerland talks with China are initial, focusing on tariff reductions and specific product duties. Washington and Beijing to discuss broader tariff cuts, de minimis policies, and US export controls over the weekend. China's Commerce Ministry says Beijing agreed to talks after US signaled willingness to adjust tariffs. Obviously, Trump won't be playing that line. He'll be saying that China came running to him. US is expected to
Well, they're
decide on
desperate for a deal, aren't they? So.
well, this is it. Um, the best deal ever. US is expected to decide on copper tariffs well before year end. Well, I'd hope so. That's
Bloody hell,
before
it's May.
yeah, that's exactly it. The low bar. Um, Shein and Temu face double-digit sales drops after raising prices to offset US tariff costs. Chinese traders are seeking alternatives to rapeseed sources as tensions with Canada threaten animal feed imports. On the macro front, China's PBOC, as I alluded to earlier on, cut reserve requirement ratio, the triple R, by half a basis point, releasing $138 billion in liquidity and lowers key rates. The PBOC is to launch a low-cost relending and tech for tech bonds, elderly care, and enhanced support for agriculture and small businesses. It's good to see Angie listening in because obviously tune into the grain market blast every day we do later on with her. China's securities regulator pledges aid for A-share companies hit by tariffs. China expands insurance firm stock market investments. Pilot by $8.3 billion to bolster markets. Basically, they're doing whatever they can to inject more money into the stock market. Taiwanese investors are pulling funds from US bond ETFs, reversing Asia's biggest buyer trend. The dollar faces 2.5 trillion with a T selling pressure as Asian nations unwind reserves. That's according to Horizon SLJ Capital. Who the hell are they? But that's on Bloomberg. US stock buybacks hit a record 518 billion over the last 3 months. That's according to Deutsche Bank. The Hong Kong dollar funding costs dropped sharply since 2008, boosted by currency peg defense. Everyone loves a good pegging. European exporters warn of strong euros impacts on competitiveness. That's in the FT. German factory orders rise in March due to US tariff-driven stockpiling. I'm glad that Wall Street Journal have added that bit because people were getting a little bit too fruity on the strong number we saw this morning. It's all to do with tariffs front loading. Geopolitics. Pakistan's army chief vows retaliation to Indian strikes, reporting 26 civilian deaths. President Xi's is to visit Russia as part of the Victory Day parades. And he's also looking to sign agreements to deepen a, quote, no limits partnership. US ramps up intelligence gathering in Greenland amid Trump's takeover campaign. Just on this as well, I did see yesterday one EU policymaker was basically saying that, both Denmark and the US kind of, we should let the Greenlanders have like a referendum to decide where they want to go. And yeah, I think that's probably the fairest way to do it. Trump says now is not the time to reinvite Russia to the G7, reversing an earlier stance. In equities, before I hand back to you, AMD boosts revenue guidance after strong Q1 driven by data center and AI growth. Super microcomputer forecast below expectations Q4 revenue, citing tariffs and economic uncertainty. Marvel Technology postpones Investor Day due to trade tensions and macroeconomic challenges. Rivian, the EV maker, warns of sharper delivery declines in 2025. Rivian, were they the ones that basically built the lorry and just pushed it down a hill? If I recall correctly.
No, that was
It wasn't them.
Nicola.
No, that's it. Yeah. We built an electric truck. Look at it go, and it's just two
Yeah,
geezers pushing. They just took
that
the
must have
brake
been
off.
about 5 or 6 years ago now.
What a stunt though. That was brilliant. Anyway, Rivian warns of sharper delivery decline in 2025, blaming Trump's trade war impact on EV demand. OpenAI to share less revenue with Microsoft as it restructures per investor talks. That was in the information newswire. Amazon's Zox, never heard of it, to scale up robo-taxi production in 2025 for US commercial rollout. Lucid maintains a 2025 production forecast despite tariff threats, but Q1 revenue misses. Mosaic beats Q1 profit expectations, fueled by strong South America performance. And
They
finally,
put the
for me,
pieces together well there, didn't they?
way, God, where was I? Oh, finally
I
for
don't
me,
know.
BMW. Oh God, it's been a long day. BMW reaffirms 2025 outlook despite sales miss, expects some tariffs to be temporary. That's an interesting one because yesterday the Ford CEO came out and
He
said he
said 3
expects sales.
years or something, didn't he?
Well, I thought 3 to 5 years. Yeah. So it just shows you what's kind of priced in and what isn't. And I think at the moment, as we've said many times, it's the uncertainty's the killer. But yeah. Anyway, back to you in the studio, my dear friend.
Good stuff. Thank you, Ryan. Apparently, we need to start a free Zach Eisman campaign. He's been thrown in Borstal for some sort of copyright violations, apparently. So
You what?
I don't know. That's what he was just telling me. So we'll we'll have to, go down to Belmarsh and get him out of Twitter jail at some stage.
Yeah. Well, yeah. Moving on.
Oh no, I hadn't thought that through. Right, yeah, let's move on very quickly. In terms of today, then, of course, we do have a policy decision out of the FOMC a little bit later on today. Before getting to that, though, we'll just cover off everything else that is going on, which won't take me very long because the only other thing on the data docket today is the March retail sales report out of the Eurozone, which is due at 10 o'clock this morning. Sales set to have fallen by 0.1% on the month compared to the 0.3% increase that we saw in the month of February, forgive me. On to that FOMC decision then. 7 o'clock this evening, London time, 2 o'clock this afternoon on the east coast of the United States is when we will get the rate decision and the policy statement, with Fed Chair Powell then chairing his press conference half an hour later. Of note, there is no summary of economic projections or dot plot this time around. The next set of forecasts from the FOMC will come in mid-June. In terms of expectations for this evening, well, firstly, the target range for the Fed funds rate should remain at 4.25% to 4.5% in what is likely to be a unanimous vote. It is just worth bearing in mind on that, actually, that the Fed's Schmid will not be voting at the meeting this evening. Very sadly, his wife has passed away, so condolences to him. His place will be taken instead by Minneapolis Fed President Neil Cash. Kashkari. In any case, the vote should remain unanimous. The quantitative tightening, that is also expected to remain unchanged, with a $5 billion per month cap on Treasury runoff after the shift that we saw last month. In terms of what we're looking for, in terms of the policy statement, we are likely to see the FOMC downgrade their assessment of economic growth, probably flagging that growth has moderated from the solid pace that we have seen previously. Nevertheless, inflation, the commentary around that should remain unchanged in terms of inflation remaining somewhat elevated, while the labour market should remain solid, particularly after the decent April jobs report that we had on Friday. Meanwhile, risks around the dual mandate are likely to remain. Well, there's clearly going to be a lot of uncertainty, and risks remain to both sides of the dual mandate, with the FOMC attentive to those. As for Chair Powell's press conference, on the whole, it's very unlikely that he will be pre-committing to any particular policy path. Instead, once more stressing that policy remains in a good place and that a data-dependent approach is how the Fed will take things going forward. I think there's two sort of obvious areas or lines of questioning that the media will likely follow at the press conference a little bit later on today. Firstly, in terms of tariffs and stagflation, Powell will probably repeat what he said at the Economic Club of Chicago about a fortnight ago, noting that there is indeed a risk of the dual mandate goals coming into conflict or coming into tension, and that if that were to happen, the Fed would manage that by assessing how far each goal is from being achieved and the time horizon over which that achievement would take place in order to determine the appropriate policy response. Certainly not going to get any overt commitments to what the Fed would do in any particular scenario from the chair later on today. The media will also undoubtedly be pressing Powell on politics and what Trump has been saying recently. And again, here Powell will very much stick to his script that he's been using for quite some time now, even going back to the first Trump administration, noting that the independence of the Fed is a matter of law, that he will not resign even if he is asked to do so by the president, and that FOMC members are not removable except for cause. On the whole, I think it's very much going to be a case of the FOMC reiterating this evening that they are firmly in a wait and see mode at the moment. They are not in any rush whatsoever to be delivering further rate cuts.
And
Instead, they
rightly
want
so.
to Absolutely. They want to sit there and assess the totality of the data as it comes in, assess
Oh, oh
exactly
God.
where the economy stands. And I think most importantly, the Fed are going to want to ensure that the inflation that we see induced by tariffs is indeed temporary. It is indeed a hump, as opposed to running the risk of inflation expectations becoming de-anchored, and I think they're going to want to obtain sufficient confidence in that before they take any
Well,
further steps back towards
but this.
neutral. And as long as, of course,
Oh,
sorry,
yeah,
I was
yeah,
going to
yeah.
say, as long as, of course, the labour market remains solid as it is, then they are, they have absolutely no reason to rush in terms of
This
delivering
is something
further
that
easing.
we keep mentioning. Yeah, it's very hard. It's very easy side to just hit on the Fed and and take the piss out of Powell, whatever. But yeah, at the end of the day, Trump doesn't know what's going to happen tomorrow, and the tools that the Fed and the FOMC are playing with are very very large tools. And you can't, once you go with one, you can't really undo it. Like they don't turn on a dime, right? So you've got to be confident. You know what the future is. Because if you're making monetary
Mm,
policy decisions, it's because you're certain of your forecast of where things are going. Now you can't be certain about anything at the moment because in theory, Trump could make a deal Monday after their talks at the weekend with China. In which case, if you've just done any, if you're the Fed and you've made a decision now to cut rates, you're going to look like a right twat. That's a technical term for
yeah.
you. So yeah, at the moment, I really, you got to feel, I know no one likes feeling sorry for central bankers, but at the moment, I do feel sorry for the FOMC and Powell in particular, because he's like, mate, just just give me a day when nothing happens, and I can try and make some ideas about what we're going to do next. But yes, rather him than me.
No, you're
Oh,
absolutely right.
stop it.
They do have a difficult job at the moment. Just lastly on the Fed, excuse me. Oh
Oh,
dear.
oh, oh.
In terms of money market pricing, the OIS curve discounting absolutely nothing whatsoever in terms of this evening's meeting. Around a 1 in 3 chance of a cut in June, with the next 25 basis point cut fully priced by July, and about 80 basis points of easing discounted by the end of the year. Of course, in other bits and bobs today, Fed Chair Powell will be giving that press conference at 7:30 this evening, London time, 2:30 in the afternoon on the east coast of the States. Just lastly, in terms of earnings, before the open today, we hear from Disney and Uber. Wonder whether there'll be a taxi called for them. And before
Oh.
after the market close, we hear from Arm Holdings. I'm still bitter that they didn't list here in the UK. And App Lovin, which, to be completely honest with you, sounds like a made-up company, but I'm assured that it isn't.
Brilliant. Mr. Michael Brown, thank you so much. Listeners, thank you as always for listening in. Hope we've added a bit of value and maybe put a smile on your face. If you are trading today, pardon me, keep it tight. Don't know anything I wouldn't do. And hopefully we see you all, or you can listen to us all tomorrow. Take care. Much love. Oh, oh,
Actually,
oh,
early
yes,
tomorrow, aren't
yes,
we?
yes. Michael Brown's making me get out of bed an hour earlier tomorrow, so you might have to play this back on the replay. If not, it's 7:30 UK time. I will probably be recording from my bed. Start bollock naked. There we go. Nice image for it.
Oh no.
Right. On that note, see you all tomorrow. Goodbye.
See you later. Bye
Bye
bye.
bye.